Welcome back to America's Web Radio. We're talking about healthcare insights and how we're going to create a new system of private free market health insurance. Let's continue with our thoughts on each of the segments. We've already talked about large employers, the self-insured market. Let's now move into the small under 50 life market and individual markets. That's where the biggest help is needed. Well, let's look at the small employers, the second part of that employer-sponsored package. Small employer-sponsored fully insured businesses provide employers subsidized premiums to about another 45 million persons. Small employers pay 82% of single premiums if you're a small employer, so it's nearly the same as large employers. And they offer 62% subsidy for family coverage, a little lower than if you're in a large group, which offers 74%. So 62% is pretty significant subsidy by small employers. And the whole idea of these programs we're going to talk about is how do we move from government subsidized insurance to private company subsidized, where there's more flexibility, where there's not a change in the subsidy. If you make more money, you're going to get the same. If you get a promotion next week, you're going to probably get more subsidy for your coverage if you're under a private plan. But the problem for small employers is that fewer than 30% of workers in businesses of fewer than 50 employees are even insured. Small businesses face the greatest challenge in trying to offer affordable health insurance to their employees. So this is the area, the small groups, the mom and pop grocery stores, the small business on the corner that's offering up services to the public, that's got fewer than 50 employees. This is the area that needs to be most addressed in any health insurance reform. If we can make insurance affordable to this market, we will have more than 30% of workers with employer subsidized premiums rather than government subsidized premiums. So, what is a fully insured plan anyway? Well, it is the most typical thing that people who are not that familiar with insurance think about. A fully insured health plan is that more traditional way to structure an employer-sponsored health plan. With a fully insured health plan, the business pays a premium to the insurance carrier for the payment of claims. So it's the insurance carrier is at risk, whether or not the claims are too high and they might have a loss, or the claims are lower and they make a profit. There are some limitations on how much profit an insurance carrier can make under the current laws that have been in place even before Obamacare. But the insurance company is the gatherer of the risk pool, if you will, to share claims between one group that might have a good year and another group that has a bad year. And that's the way the spreading of risk occurs through the insurance companies that when they're really acting as insurance companies. But Obamacare hurt these small groups the most. Its mandates distorted normal pricing. Price compression is what that's called. It overcharges young groups in favor of old age groups. Single risk pools were required under Obamacare, and that lessens the value of healthy programs and incentives that any single employer might implement, whether it's lunchtime programs, healthy activities, educational programs. Everybody under Obamacare is pulled into what's referred to as a single risk pool. So it does not benefit any single employer to get lower premiums if they do good things to help their employees stay healthy, make them safe, make them aware, help them with compliance with their doctor's treatments and care plans. The second major group we want to talk about are individual policies. These are purchased by somewhere around 5% or more of the population, or about 15 million people. This market was also damaged by Obamacare for the same reasons the small group market was hurt. In addition, individuals were required to buy extra coverages that they didn't want or need. Obamacare had very rich benefits that they said, if you want catastrophic plans, I'm sorry, you think you're healthy or you're willing to pay for some claims, you can't have that less expensive catastrophic coverage. So Obamacare really focused on just premiums. They didn't think about the total financing options, whether that's through savings, whether it's through health savings accounts, whether it's through people who have enough cash that they set aside that they want to pay. It was simply making sure everybody had more coverages than they wanted, but it was a one-size-fits-all. And under Obamacare, if they failed to purchase health insurance, if their employer didn't offer insurance and they as individuals didn't go out and get insurance, they faced a tax penalty. Well, fortunately, that individual mandate or tax penalty was eliminated as of January 1st, 2019. So it is not in place anymore. And that also will create other issues as to why Obamacare is in a death spiral, because only the unhealthy people are staying in Obamacare. In 2018, 10.3 million people received subsidized coverage through federal exchanges for the purchase of Obamacare. Of those, 88.9 million, or 87%, were receiving premium subsidies. For those enrollees, premium subsidies were covering 87% of the cost of coverage in 2018. So you can see that Obamacare was covering a large percentage of the cost of insurance when people were purchasing through an exchange. But if we could convert that to an employer subsidy of nearly the same amount, we would save enormous amounts of money for our federal treasury. And we would shift the cost burden, if you will, from the government to employers who actually want to provide health insurance for their employees and can and want to subsidize the premiums if the overall cost of healthcare was in fact reasonable. So many in this population, whether they're in small groups, under 50 lives, or they're individuals, many in this population are what we would call the working poor, where there is no employer-sponsored health insurance. These are generally groups of less than 50 lives. This is the population that is in most need. This is the population that worries the most about healthcare. This is the population of voters that are fearful that their pre-existing conditions are going to keep them from getting coverage if Obamacare is eliminated and not replaced with something that really works for them. It's why many people in this market, who are traditionally the working class folks who are very much in favor of the Trump administration's approach to America First, to bringing back manufacturing, to making sure that things made in America is what we're buying, and that we're working to build this economy. These are the folks that are traditionally Trump voters, but in fact, they'll vote Democrat because of their concern about health care, which is a very expensive part of their overall budget. And they're very concerned. It's why I think many of the new members of Congress on the House side were elected in 2018. If Republicans don't look at how we can create a system to help these people get coverage, cover their pre-existing condition, have guaranteed coverage, all the positives of Obamacare without the negatives. If we don't figure out a way to do this, the Republicans are going to continue to lose elections. Talk about this issue of government subsidies versus employer subsidies. Employers are having a hard time finding good employees, and so more and more of them are adding health insurance benefits and even benefits beyond health insurance, daycare services, all sorts of support for families to be sure that the workers don't have to worry about issues that are at home. Workers that are traveling, giving special daycare center help and support, all sorts of vision, dental, legal, wellness support programs. Employers are willing to put money in to help their employees stay happy and healthy, but also to recognize that the employees are their human capital. Employers want to provide these kinds of services. And on health insurance, if it's just more affordable, they're willing to provide some subsidies for that. Let's take a look at what the federal government subsidies are today. It's really astounding to see how much Obamacare is providing subsidies to populations that may not really need a subsidy. One of the areas that the federal government uses to measure the need for health insurance subsidies or any government program is something that most of us in the general public don't even know about or understand. It's called the federal poverty level, or FPL. The federal poverty level is a calculation that's done by the federal government that says that an individual or family is not making enough money so that they deserve certain government programs. Excluded from the federal poverty level are a number of free services and support that are already provided for the government. So it's a very complicated, very arcane, very difficult to understand calculation. But here's what we do know. There's a table for 2019 that shows by number of family members how much of an Obamacare subsidy can be provided for families up to these limits. Let me give you an example. For a family of two, just a husband and wife, they can receive Obamacare subsidies up to 4 times the 2019 federal poverty level. Well, how much is 4 times the 2019 federal poverty level? Would you believe that it is just under $66,000 a year? The average income across the country is somewhere in the 50,000s. But now we're going to provide subsidies for a family of two, making up to $66,000 a year. Let's take a family of 4, a mom and dad and 2 kids. Who's eligible for some level of federal subsidy? What is 4 times the federal poverty level for that family? Because it's that 4 times the federal poverty level that gives people the ability to claim a subsidy under Obamacare. Well, would you believe that 4 times the federal poverty level for a family of 4 is over $100,000? It's $100,400 in 2019. So a family making 6 figures can still qualify for some level of subsidy. Now, clearly the subsidy decreases from lower levels of income to these higher levels of income. But why in the world would anybody develop a program except to buy voters that would provide subsidies for a family of 4 making over $100,000 a year? Well, even with that, the number of uninsureds, which is another key population that we need to be able to develop affordable health care for, under Obamacare, which was supposed to solve the uninsured problem, there's more than 28.5 million people in 2017 that were still uninsured. Most of those, many of those, were young people who just were not going to pay the higher premiums that Obamacare required because of the expanded coverage requirements of Obamacare, services that the young people didn't need. And then without getting into all the weeds and details of it, the issue that I mentioned earlier called price compression required young people to pay more than their fair share, more than their actuarial equivalent, to be able to offset the costs of sicker and older people. Well, young people really didn't want to buy insurance at the cost they were before Obamacare, and they certainly didn't want to do it when Obamacare increased their premiums by roughly 50%. Well, time goes by fast when you're having fun. Let's take another break for this third segment and come back and wrap it up for this hour in just a few minutes.